the MPC decided unanimously to increase the policy repo rate by 50 basis points, 50 basis points to 5.4% with immediate effect. Consequently, the standing deposit facility, that is SDF rate, stands adjusted to 5.15%, and the marginal standing facility, that is MSF rate, and the bank rate stand revised to 5.65%. The MPC also decided to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. With inflation expected to remain above the upper tolerance threshold in Q2 and Q3 of the current financial year, the MPC stressed that sustained high inflation could destabilize inflation expectations and harm growth in the medium term. The MPC therefore judged that further calibrated withdrawal of monetary policy accommodation is warranted to keep inflation expectations anchored and contain the second round effects. The real GDP growth projection for 2022-23 is retained at 7.2%, with Q1 at 16.2%, Q2 at 6.2%, Q3 at 4.1%, and Q4 at 4%, with risks broadly balanced. Real GDP growth for Q1 23-24 is projected at 6.7%. On the assumption of a normal monsoon in 2022 and average crude oil price, that is Indian basket, of $105 per barrel, inflation is projected at 6.7% in 2022-23, that is the current year, with Q2 at 7.1%, Q3 at 6.4%, and Q4 at 5.8%, with risks evenly balanced. CPI inflation for the first quarter of next financial year 2023-24 is projected at 5%. It is proposed to enable the standalone primary dealers to offer all foreign exchange market making facilities as currently permitted to Category 1 authorized dealers subject to prudential guidelines. This measure will provide customers with a wide set of market makers to manage their foreign currency risk. This will also increase the breadth of the forex market in India. The second measure in respect of the standalone primary dealers is that we have decided to permit standalone primary dealers to undertake transactions in offshore rupee overnight indexed swap market, that is rupee OIS market, with non-residents and other market makers. It is now proposed to enable this system, that is the Bharat bill payment system, to accept cross-border inward bill payments. I repeat, cross-border inward bill payments. This will enable non-resident Indians, that is NRIs, to undertake bill payments for utility, education, and other such payments on behalf of their families in India. In order to make this system more broad-based, it has been decided to include credit information companies, that is CICs, under this framework of integrated ombudsman scheme of the RBI. This will provide a cost-free alternative redress mechanism for grievances against credit information companies, that is CICs. Further, with a view to strengthen the internal grievance redress by the CICs themselves, it has been decided to mandate the CICs to have their own internal ombudsman framework.